the Ugandan economy is still nascent in a way in regards to the asset classes through which someone can keep money, can keep value. And real estate is key because a market lacks the depth, the market does not properly understand some of the other instruments, some of the other asset classes, the equity market, bonds. So a lot of people, especially the informal, the unsophisticated class of the workers, keep money in real estate. And then you also have investment. These are investment groups, investment clubs. A lot of their retirement money is kept in real estate. So this has been a driver for the real estate sector. A lot of the increments in the prices of land in Kampala has been driven by some of those factors. Now, when you have this tax that comes after, because the intention of the government, I presume, is to tax any property that is not used as a primary home, and that is what the bill says. The sale of any real estate that is not used as a principal primary residence of the taxpayer. One of the cardinal principles of taxation is that income tax taxes business, it taxes trading. So when you have a tax that is taxing a transmission or a change from one asset class to another, then I have a problem with that. There are aspects of an activity that give it away as a trading activity. If I am not trading, then I shouldn't be taxed. So my problem is that this tax overreaches. It goes beyond that principle. It seeks to tax someone who is merely keeping money, retirement money, for example, in form of a real estate asset. It seeks to tax. If, say, I have to sell my home in Komamboga and I'm using the proceeds to buy a home in, say, Chira, then those proceeds, the government will take a portion of that, and then the remaining is what I'll use to buy my next home. That's overreaching to me. I don't think it's a good tax in that sense. The other issue I wanted to clarify upon is you said the newspaper reported that it's a withholding tax. It's not a withholding tax. The bill says it's a final tax, and it has nothing to do with any other tax that is already being levied. So that amounts to double taxation. From a real estate trader's perspective, you have income tax. If, say, I'm running a company, the company is already taxed under corporation tax at a rate of 30%. When you bring this tax, this new tax, and say every 15th of the following the transfer of a disposal of an asset, you're supposed to account for tax on a disposal of a real estate asset. And yet, at the end of the year, I'm expected to again account for tax on my gross income out of my trading activities. And then you're saying the 5% is a final tax, and it does not come as a tax credit. In the earlier bill that came in 2023, that tax was a withholding tax. Now it is not. So there is no tax credit. You cannot offset it off the final tax, or off the final income, of the final liability that is due from you to the government at the end of the year. So my problem again with that is that possibility of a double taxation of real estate. Okay. Yes. I don't entirely want to have to be misunderstood or understood to have an entirely negative attitude towards the bill. The taxation of these areas, real estate, and I've already mentioned, let the tax be restricted to trading activities. When you say, if I sell land that is not my primary home, then I'm subject to tax. For me, it does not do it. That land, if I'm not trading, if I'm not trading, and that land is probably an investment, a retirement investment. And I've already explained this. The informal sector, the people that don't properly understand some of the other instruments, some of the other asset classes, all that money is there, but they're not trading, but this is money that they're keeping for a rainy day. You don't tax that. The bill has other features. The bill has is introducing changes into the Income Tax Act, other changes that I'm rooting for, especially in regards to international taxation. Currently, international companies with a commercial interest in Uganda are taxed that don't have subsidiaries, but are trading through branches. Branches, say a UK company has like a representative here who contracts on its behalf. So those kinds of commercial interests are being taxed under the withholding tax regime as branches. But the introduction of the permanent establishment principle into our law will ensure that the profits that are earned by those kinds of trading activities are properly taxed, and there is less repatriation of the money being earned in that space. So there is still room to raise the money that the government is after to cover deficits, without going after the ordinary person. Yes, the two of the certainties of life is taxes and death. Yeah. So we can't run out from the question of taxation. For as long as we want a better country, then we have to contend with the fact that we will always have to pay tax. You've seen the infrastructure in Kampala falling apart. Once in a while I drive on the Nigeria Bulindo Road, and every time I'm on that road, I'm just cursing. I don't know how people who live that side of the city have to contend with that, driving on that road twice every day. So, so taxation is not a problem. The problem for me is failing to properly lock down on who should be paying these taxes, who is making money.
And you had earlier mentioned there are other windows of taxation that are present that government should tap into. Could you mention some of those?
I've just mentioned international taxation. These companies that are making a lot of money here through small branches and then repatriating all that money. Profits, And one of the provisions in that bill is to have them, to force them, because the government intends to tax them as separate entities from their motherships abroad. So and that might force them to incorporate and run separate subsidiaries here, which is good for us. So that's one way. That's one way that, and I applaud the technocrats in the Ministry of Finance and URA for that particular provision. My quarrel with the bill is the intention to go after non-trading activities of people who are keeping retirement assets and the like.
Okay.
We're a poor country. We need to act like one. You can't say we are raising.
The president will disagree. He says we're in middle income status.
Yes, we are. We are, but we're still a poor country. I'm not saying being a middle income country doesn't make us a rich country. We're not. So, I think our problem is mainly to do with the spending. We have not cracked that code on how to prioritize. If we do that, then some of these taxes we shouldn't be. Some of this borrowing, rather, we wouldn't be borrowing this much, at least.